My name is Bonitunya. This is Business. The Central Bank's Monetary Policy Committee has published a new loan pricing tool. This formula, known as the Kenya Bank Reference Rate for pricing bank loans, could see borrowers seeking new loans to access them at lower prices. Customers will also be able to compare what rates the different banks are offering and loading it onto the KBBR as the CBK makes efforts to lower interest rates in the country. Here's more.
Looking at their crystal ball, many analysts had predicted that the Central Bank's Monetary Policy Committee will not lower the benchmark lending rate just yet, as it walked a tightrope in the quest for stability without choking the country's economic growth. In its quarterly sitting Tuesday, the Monetary Policy Committee maintained the benchmark lending rate at 8.5%. However, the back of every lender's mind was the introduction of Kenya's Bank Reference Rate, or KBBR. Previous attempts by the CBK to use the central bank rate to guide interest rates have always been ignored by banks. While the CBK has been at 8.5% for months now, no commercial bank has lowered its interest rates during this period. Effective today, the CBK has set the KBBR at 9.13%. This level of the KBBR will be effective until its next review in January of 2015. The pricing tool is published weeks after Treasury laid out an elaborate plan to force commercial banks to push down the rates they charge on loans and advances to customers.
The advantage of this having a uniform base rate is that at least now you know every bank will be charging base rate of say 10. At the moment, all the 43 banks have their own base rate. You go to a bank, they will tell you our base rate is 23, and then they charge you 23 minus or plus.
Kenya has held the key rate steady for a year as it weighs the prospect of inflation exceeding the 7.5% upper end of the government's target range in June. The World Bank last month lowered its 2014 economic growth forecast for Kenya to 4.7% from a projection of 5.1% it gave 6 months earlier, and lower than the government's forecast of 5.8%, citing worsening insecurity and a delay in seasonal rains that has affected crops.